Welcome to today's deep dive. If you're prepping for a major strategic meeting, or maybe managing an active investment portfolio, or honestly just trying to navigate a career path that keeps shifting beneath your feet, you are going to want to stick around for this conversation.
Yeah, absolutely.
We are pulling our insights today from a really fascinating blog post. It was published on February 25, 2026, by an author writing under the name The Trading Job. The post is titled, "The Cheat Code Doesn't Exist."
Such a great title.
It really is. And our mission today is to unravel a very specific cognitive trap. We're going to explore why the human brain, even a highly educated, experienced brain, just stubbornly searches for ready-made answers in environments that are fundamentally unpredictable.
Right. And why seeking out that exact formula will, it'll consistently leave you a step behind.
Okay, let's unpack this.
To really get to the bottom of this trap, we have to look past the surface mechanics of trading or strategy. We need to dive into the behavioral economics of it all. The author highlights early on that we are literally hardwired to look for shortcuts.
Which makes sense, right? Evolutionarily speaking.
Exactly. From an evolutionary standpoint, the brain is an energy conservation machine. Finding the path of least resistance is what kept us alive in the past. But in a modern context,
It's where we have this massive information overload.
right, in that context, that survival mechanism turns into a huge liability. I mean, we want the perfect 30-day diet plan. We want the foolproof trading strategy.
We just want the manual.
Yes,
Yeah.
we want certainty because
Yeah.
uncertainty requires a massive expenditure of cognitive energy.
The author actually introduces a concept to explain this. They call it the changing syllabus. And it's a really great lens for understanding our own blind spots here.
It really is.
Think about our education system. From kindergarten all the way through college, we're conditioned to operate within a closed loop.
Yeah, we're taught that every problem has one correct, static answer.
Right. You memorize the formula, you apply it to the test paper, and you pass. You're basically rewarded for rigidity.
But that closed loop, it completely shatters the moment you step into a dynamic environment. The author draws a really sharp contrast between that school environment and the reality of the stock market.
Oh, I love how they describe the market in the text.
Yeah, they call it a living, breathing, hyper-complex organism.
Which is so true. It isn't a math test with an answer key at the back of the book.
No, not at all. It's an environment driven by the collective, often erratic emotions of millions of human beings, plus the sheer unpredictable chaos of global events.
Which, I mean, makes sense intellectually. I think most people listening to this deep dive already know that the market is dynamic.
Sure.
But the disconnect happens in how we apply that knowledge.
Right.
We know the quote-unquote question the market is asking is constantly changing.
Yes, the text lays out a very clear progression for this.
Right. Like yesterday, the single biggest macro question might have been all about inflation data.
And then today, the focus has completely shifted to a new geopolitical conflict.
Exactly. And tomorrow, the market could be reacting to a sudden corporate accounting scandal, or maybe an unexpected technological breakthrough. We know this happens.
We do. Yet, under pressure, we completely revert. We start looking for the answer to yesterday's test.
Why do we do that?
Well, that's the crux of the issue. When the pressure hits, your cognitive load spikes, and we just retreat to our most ingrained conditioning.
The school mindset.
Exactly, the school mindset. You might spend, say, all weekend mastering a specific trading strategy that was built for an inflation-driven market.
And it feels good. It feels secure.
It does. But if you blindly apply that static strategy to a market that is suddenly driven by a banking crisis on Tuesday morning, you'll get wiped out.
Because the environment fundamentally transformed, but your approach didn't.
Precisely.
Here's where it gets really interesting. The author uses an analogy to drive this point home, and I want to spend a minute breaking down the mechanics of it.
It's a great analogy.
It is. Imagine trying to run a massive, highly complex, modern AI program, but instead of running it on a modern server, you try to run it on a 15-year-old laptop.
Right.
And not only do you try to run it, but you actually expect it to perform flawlessly and instantly.
It's the perfect way to frame the cognitive dissonance we experience. Because that 15-year-old hardware isn't inherently bad or broken.
Right. It did its job perfectly fine back then.
Exactly. It was simply engineered for an entirely different era of software. It lacks the processing power, the memory bandwidth, and the architecture to handle the sheer volume of inputs required by a modern AI model.
Translating that to our behavior, the hardware is our static, rigid mental models, the rules we learned 5 or 10 years ago.
And the software is the modern market.
Right. It's algorithmic trading, instant global news cycles, high-frequency volatility. If you are listening to this right now and you have ever felt that crushing frustration when an old, reliable strategy suddenly stops working out of nowhere,
This is exactly what is happening.
yes. The world updated the software, but you're still trying to process the data using the old hardware. You're waiting for the old rules to apply, and the machine is just crashing.
Which forces a necessary pivot in how we operate. If the questions are constantly changing and the software is constantly updating, then demanding an exact permanent answer from your analysis is, well, it's nothing but a trap.
But wait, let me push back on that for a second because I know what our listeners might be thinking right now.
Go for it.
Isn't that incredibly frustrating? If I spend 10 hours analyzing a company's balance sheet, looking at cash flows, studying market share, shouldn't I be allowed to expect a specific outcome?
It feels like you should.
Right. How do we justify putting in all that rigorous work if we can't expect a definitive answer?
That right there is the ultimate psychological hurdle. You are putting in the work not to guarantee an outcome, but to understand the parameters of the game.
Okay, that makes sense.
The author argues that we have to shift our entire framework. We have to move away from demanding an exact answer and instead develop what they call a view.
Let's break down the difference between those two, because the text actually provides some very specific numbers to illustrate this.
Yeah, the exact answer approach.
Right. The exact answer approach sounds like this. This stock is going to bounce exactly at 150, and it will go to 200 by Friday. It leaves absolutely zero room for nuance.
And that rigidity sets off a massive psychological trap.
How so?
Consider the behavioral economics at play here. Let's say you hold that exact answer as an absolute truth. The stock drops to 148. What happens?
Well, the market didn't obey the prediction.
Precisely. The certainty vanishes.
Yeah.
Because you demanded an exact answer, your brain experiences acute cognitive dissonance.
Ah, and then the sunk cost fallacy kicks in.
Exactly. You put in those 10 hours of rigorous research, so you just refuse to believe you were wrong. People panic. They freeze.
Oh.
Or they stubbornly hold on to a losing position because they're just waiting for the market to realize it made a mistake and return to the right answer.
Wow. They're essentially yelling at the test paper because the math problem changed while they were solving it.
That is a perfect way to put it.
But if we contrast that rigid panic with having an adaptable view, the language completely changes. The author outlines what a view actually sounds like.
It's much more fluid.
Yeah, it sounds like this. My broader thesis is that this sector is gaining structural momentum. If the stock pulls back to the 145 to 150 zone and I see buying strength, I will enter. But if it breaks below 140 on heavy volume, my thesis is invalidated and I will step aside.
If we connect this to the bigger picture, a view is simply a framework. It is mental scaffolding that allows for flexibility.
Right.
When you operate with a view, you acknowledge a fundamental truth about dynamic environments. You're dealing in probabilities, not certainties.
And just to translate that into real-world mechanics for a second, when the author mentions breaking below 140 on heavy volume, they aren't just throwing around jargon.
No, that's a very specific indicator.
Right. They mean the price isn't just dropping. There is massive, undeniable selling pressure backing up that drop. The thesis isn't just slightly off. The fundamental behavior of the asset is actively contradicting your theory.
Which is why the view is so powerful.
Yeah.
It predefines your exit. You aren't playing the role of a fortune teller, trying to predict the future with absolute precision.
You're just preparing.
Exactly. A view means you're preparing for various scenarios. You have a plan for if the market validates your thesis, and you have a clear, emotionless line in the sand for when your thesis is proven wrong.
You're no longer reliant on the market behaving exactly as you demanded.
Right. You've removed the ego from the equation.
But adapting to this mindset means swallowing a really tough pill that the author introduces next. And this is a harsh reality for anyone who prides themselves on deep research.
It's a tough one to accept.
It is. The reality is that today's analysis is strictly valid for today's situation.
The expiration date of analysis.
Yep.
It's an incredibly difficult concept for many professionals to accept because, well, we want our hard work to have permanence.
Of course we do.
When a skilled analyst maps out a company's projected earnings, they're doing that based strictly on the macro and micro data available at that exact second.
The text gives a really great scenario for this. Let's say it's Monday. You are a skilled analyst and you map out your chart. You establish your support and resistance levels based on all the data you have. The analysis is practically flawless.
Okay.
But then on Tuesday, the central bank unexpectedly hikes interest rates.
What's fascinating here is how quickly the value of information degrades.
Just vanishes.
The moment that unexpected rate hike hits the wire, the underlying variables of the entire financial system have shifted. The cost of capital changed.
Right.
Therefore, that flawless analysis you did on Monday, it belongs in the trash.
Yeah.
The situation changed, which means your view must change instantly. And crucially, it must change without ego.
Man, I think every investor listening has a scar from a Tuesday exactly like that.
Oh, without a doubt.
I know I do. You map out a perfect tech sector play, all the indicators align perfectly, and then an hour after the opening bell, a sudden supply chain disruption hits the news cycle halfway across the world.
And everything tanks.
It stings, it feels deeply unfair, and that brings up a really crucial part of the text, the ego.
Yes.
The author describes this persona, the angry amateur.
I love this part.
This is the person who watches their setup completely fail on Tuesday, and instead of adapting to the new data, they just get furious. They point at their screen and yell, but the chart said it would go up.
We laugh, but it is a classic stress response.
Yeah.
They are treating the chart like a contract the market signed with them.
Like a binding agreement.
Exactly. But the author delivers a profound, almost uncomfortable truth regarding this behavior. They write, "The chart didn't say anything. The chart just showed what happened in the past."
Just a historical record. It is not a crystal ball.
Not at all. It's just footprints in the snow. And the moment new data enters the system, a blizzard starts, so to speak, you have to be willing to abandon your previous analysis.
And if you hold on to it out of pride,
You're going to sink with the ship.
which ties perfectly into the author's final, very stern warning. They tell us we have to stop searching for mentors. Specifically, they're calling out the kind of gurus who are aggressively marketing guaranteed stock tips.
The ones selling their proprietary formulas.
Yes. Or promising exact price targets.
Because those individuals are essentially preying on that fundamental psychological weakness we talked about at the very beginning of our discussion.
The need for a shortcut.
Right. They know that the brain craves certainty and wants to conserve energy. So they're selling the illusion of certainty in a world that, by its very nature, does not support it.
They're selling the manual.
They're selling the cheat code. But the whole premise of this analysis is that the cheat code does not exist. The game is too complex.
So what does this all mean? For you listening right now, the takeaway is demanding, but it is also incredibly empowering.
It really is.
Stop looking for the cheat code. Stop asking someone to just hand you the predetermined answer. Instead, commit to doing the hard, continuous work of building your own flexible frameworks.
Build a view.
Exactly. Cultivate a fluid, adaptable view. Accept the harsh reality that all your brilliant analysis has an expiration date, and train yourself to adapt the very second the situation changes the question.
This raises an important question, and it's something I highly recommend reflecting on after you finish this deep dive.
What's that?
Well, we discussed how our early conditioning trained us to seek these static, guaranteed answers in a world that actually demands adaptable views. So think beyond the bounds of an investment portfolio for a moment.
Okay.
Look at your daily life. How much of the chronic anxiety or frustration you experience in other areas, like trying to map out a rigid 5-year plan for your career or dealing with the complex, evolving dynamics of your personal relationships, how much of that comes from stubbornly waiting for an exact answer when life has already moved on, updated the software, and changed the question entirely?
Wow. That is a phenomenal, heavy thought to end on. Are you holding on to old hardware while your life is trying to run new software? It's definitely something to sit with. Thank you so much for joining us on this deep dive. We really appreciate you taking the time to explore these concepts with us today. Stay curious, keep your frameworks flexible, and above all, keep adapting.